That was our IDs where you could send us your queries, the WhatsApp number and the email ID where we wait for your financial portfolio queries which are answered by our experts. But then let's move on to cryptocurrencies. Now, the world of cryptocurrencies, we recently shook by the collapse of FTX, the world's largest, the second largest crypto exchange. But what can investors learn from this now, and what is the role of regulators in this entire episode? To discuss this and much more, we have with us Ajeet Khurana, founder of Reflexical and Prashant Kumar, founder and CEO at weTrade. Welcome both of you on the show. And Ajeet, the first question comes to you. Crypto means an underground burial chamber, and crypts have been as central to Hollywood horror movies as a white sari rain dance has been to Ramsay Brothers Bollywood horror movies. Now, do you agree the story of crypto started with greed and con is its ending?
I totally do not agree. Coincidentally, the crypt is, that underground tomb, but crypt also stands for cryptography, which is the crypt here. Having said that, I must say that when events like this FTX meltdown occurs, your concern that this is all greed and this is all going to go down to the ground actually is valid. The problem is that all three parties, that is issuers, regulators, and investors, have to share some part of the blame. Investors have to share the blame because they believe that a 10x, 100x overnight within a year can happen, while that is economically not possible. Issuers have to take more responsibility and not do what we saw Sam Bankman-Fried do in terms of using money that was not his to try to increase his wealth. And regulators, who have rightly been concerned about crypto all along, should stop just being concerned and do something about it.
But then let's talk about the regulators. Now, do you think that the alleged irregularities, including customer deposits being inappropriately used to buy and prop up the company's owned FTX token, is a severe lapse of regulatory authority in place? I know you just divided the blame that needs to be put on the concerned stakeholders, but then what about the regulatory lapse? Don't you think that it is the most integral part of introducing any kind of financial instrument or any new avenue where you know the kind of response and interest of investors would be like that?
Crazily enough, if you went through the terms of service of FTX, what they have done is not violating their terms of service. This is scary because that means that according to their own terms of service, which we apparently all say yes to when we sign up on such a platform, they could do this. Of course, that doesn't mean they will end up in bankruptcy, but their initial action, which by the way is illegitimate by any standard. It is like the brokerage house using the customer's money, the equivalent of that. The problem with regulations here, and regulators should have been more vigilant, is that there's a huge jurisdiction arbitrage being done, where companies will sign up or incorporate in Seychelles, Panama, British Virgin Islands, or some of the easier lax territories, and then operate business in other territories. So it's not clear whose jurisdiction it is. And so far, regulators have allowed to let this arbitrage continue, and that is a problem.
We have Prashant Kumar also who's joined us. So Prashant, would you say that you're in India, if we laughed out loud on RBI apprehension towards crypto, the joke is on you now. The central bank deserves praise for standing firm on its stance against cryptocurrencies, warning investors time to time of their inherent risk despite silence from the center. India literally dodged a bullet over here. What will you say, Prashant?
So I'll probably break this. It's a very good question, and thank you. And hello, Ajit. I believe we met like a few months ago on similar topic. So, but I'll break my answer into at least three observations in three parts. Okay. Take up as an insight first the whole FTX fiasco. You would see that FTX US customers are protected, but international customers are not, because US has made it extremely well regulated with the guidelines of SEC, that if you are operating into the US territories and if you are having the US customers, then there is a certain manner that you need to do the business. So first, I'm just putting aside a fact, a healthy set of regulations still go a long way in protecting the interest of customers if something goes wrong. Now, second, coming to the Reserve Bank India's guidelines, I think just like the last time, and I'll reiterate my stand, that when RBI says something, it says for the benefit of the common public who are a few yards away from being able to completely understand and take uneducated choices for crypto investments. Given that we still do not have regulations, I think the current stance of the Reserve Bank to somewhat demotivate the common public from entering into it is fairly justified. But then comes a third part that does not change the fact that you need to have good regulations. I will give you a extreme clear parallelism, let's say, into your stock market. You have brokers, you have exchanges, and you have custodians. They are very well defined that an exchange cannot go ahead, like an NSE cannot take up my shares and just do something about it because they are governed by regulations. You bring up similar set of regulations and things will just be fine. And FTX cannot just get things done because of terms and conditions that you guys rightly talked about. But no, they are bound by it. Similarly, I have forever been rooting that we need regulations. A number of companies like us are being trying to be over compliant in absence of it. It will actually ease our life. It is going to ease the life of the customers. Hope that gives you a three-facet summary of my take on to this question.
What has been your experience on the exchange, post the FTX fiasco? Are you getting panic calls from your investors, stress calls from your investors, volumes going down?
So, no, we have not received any panic calls from our investors.
Okay.
For two reasons. We did see close to a 20% sell-off of our holdings that we were having.
Okay.
Having said that, we have always been very, very clear about one little thing, right? And this one little thing changes the game for a exchange which can go bankrupt versus one which will not, is never to change the form of the currencies that you receive from your customers. If I take a Bitcoin, I will always have that Bitcoin. If I take an USDT, I'll have that USDT. We make our margins, of course, with the business that happens of the exchange on this, but we do not change it. And if we do not change it, nothing happens. The panic would have happened if at 20% of withdrawals that happened even in our exchange, I would have suddenly stopped the withdrawals. No, we did not. We continue to give them real-time liquidity, and we continue to actually give them the rupees in real time also, which ensured that that 20% stopped at 20%. Imagine if at that point of time, what happens is you say that, oh, you can't withdraw, then every 100% will come onto you. And that's the classic bank run. So no panic. In fact, when those 20% got sold and withdrawn, we actually made some money out of it, just like any exchange, which makes money on the business which happens.
Talking about the portfolio that you have currently in crypto, are you rebalancing?
No.
Ajeet?
So I had started that exercise way back. There is no specific rebalancing as a result of this incident. But when the bull market clearly had said bye-bye to us, at that point, I realized that you have to move to increasingly quality stocks, or rather tokens, which primarily is Bitcoin, Ethereum, and a few others.
Why that call? What was that trigger that made you take this decision way back?
Okay, that's very simple, and I'll draw an analogy with the stock market.
Sure.
That small cap stocks, like small cap tokens, have the ability to give extraordinary returns because their base is small, so they can double or triple much faster than a very large cap stock. When the market becomes tough, you know that everybody is going to feel the pain. Now the reverse situation occurs, that the small cap token can also degenerate in value at a much faster pace than the larger cap token. So it's a very simple common sense thing that because the beta, as we call it in the stock market, is higher for smaller cap, it's quite logical to move from smaller capitalization to larger capitalization.
Perfect. Prashant, now the so-called crypto winter, is it going to stay long over here?
As a result of FTX going down, I would like to believe that it sets back the crypto ecosystem at least by a year, if not more.
Ajeet, what is your take on this? I can see you smiling. Actually, I don't have an identical view. We have definitely suffered a kind of crisis of confidence.
Okay.
And let's look at it this way. What was the price of Bitcoin prior to the FTX crisis, and what is the price of Bitcoin after the FTX crisis? There definitely is a few percentage fall, but this is nothing compared to the 70% it had already fallen. Now that 70 has become 75. So, of course, I don't want to undermine that additional 5 or so percent, but in reality, in the very short run, by that I mean weeks and probably few months, the FTX crisis or overhang will remain. I also worry that there might be more crisis coming on as a cascading contagion from the FTX. But having said that, the real reason why the crypto markets fell before any Luna or Celsius or any of these crises came about, the two real reasons were the lack of liquidity in the market arising from significant increase of interest rate in the US, as well as the fact that the tokens had reached unsustainably high prices. Both of those fundamental reasons will dictate when the turnaround occurs.
Right. So right now the crypto meltdown, that's really bothering a lot of investors. We really hope that it just goes away and once again we can see this market growing up. Thank you so much, gentlemen, for being a part of this show and explaining all the aspects of this crisis to our viewers.